Hi everyone, welcome back to my channel. Today we're going to talk about types of audit opinions. If you like what you see, please give this video a thumbs up and also subscribe. So for the overview of today, we're going to talk about the unmodified or unqualified opinion and then the modified opinion, which breaks down into qualified opinion, adverse opinion, and disclaimer of opinion. So the first opinion an auditor can give is the unmodified or unqualified opinion. Essentially, this is stating that everything's okay and it's free from material misstatements. This is the best opinion you can get because it basically means your statements are okay. It doesn't mean that they're completely error-free. They're error-free to a point where it would not materially impact anyone making decisions on them. An easy way to remember this is that if you had to submit an assignment or some work to someone to review and they gave it back to you unmodified, that basically means you did a good job. So remember that an unmodified opinion is a good opinion. The second opinion given by auditors can be a modified opinion. This is essentially the opposite of an unmodified opinion. If an unmodified opinion is a good opinion, then a modified opinion is not so good. So what this means is that your entire financial statements are not free from material misstatements, or part of your financial statements are not free from material misstatements. There's three types of modified opinions that we're going to go talk about. The first being a qualified opinion, an adverse opinion, and then a disclaimer of opinion. So a qualified opinion is an auditor saying that your statements are fairly presented except for a specific area. For example, this could be a misstatement of inventory that is so significant that the auditors will have to say that the inventory balance is materially misstated, however, the rest of the statements are okay. The next opinion is the adverse opinion. This is the one that you want to stay the farthest away from because it basically means your entire financial statements are materially misstated. If you're a client and you get this type of opinion from your auditors, you should really work with them to figure out how to change it to become an unmodified opinion. The last opinion we're going to talk about is the disclaimer of opinion. This is when the auditors cannot give an opinion. And the reason for this could be that maybe there was a fire in the warehouse or there's a fire in the accounting department and a lot of the accounting records were just burned. So the auditors couldn't obtain sufficient evidence to prove any assertions that they wanted to. If an auditor gives a disclaimer of opinion, they also have to provide the reason why that they're giving this type of opinion. On this slide, I just want to show you an example of Bank of Montreal's year-end financial statements and an excerpt from the independent auditor's report. In the report, KPMG stated that the audit was on the financial statements of Bank of Montreal. And then they say, in our opinion, the consolidated financial statements presented fairly in all material respects, which essentially means they gave an unmodified opinion. If you take a look at more public companies' financial statements, you'll probably notice that the independent auditor's report look very similar regardless of the audit firm, and that's because there's always a set structure that most of the firms follow. Thanks again for watching my video. If you like what you saw, please remember to like and subscribe. If you think this video can help someone else, please remember to share it with them. If you have any questions or comments, please let me know in the comments below.